Hello guys, welcome once again to my channel. How have you been and how's been your trading session? Hope you've been getting very wonderful results from all your trading sessions. I'm glad to welcome you once again. If you're new, kindly subscribe to this channel. You will get a lot of benefits from here, and also please turn on the notification bell so that once I upload a new video you get notified immediately. I am glad to do this video because this is the part 4 of the secrets of moving average, that series that we have been working on. We've done why the moving average is called the moving average. We've talked about what it means to have a period. We've talked about what the shift means. We've talked about what the methods are, all the simple, exponential, the linear weight, and then the smoothed. Today we are looking at the part 4 of the moving average, and you will realize that there's a portion that says apply to best understand this. That's why I want to start this video from this place. I'm starting it from this diagram. The diagram you're seeing right now is the diagram of a typical candlestick. This, is the bullish candlestick by the color green, and this, is the bearish candlestick by the color green. Now, when you look at the parts of a candle, you will see that there are some distinct parts here. If you see this thread-like part, the top of this thread-like part here is called the high. The high means that if all things being equal, this thing should be here normally, but because it was here, then by maybe fluctuation of volatility is back to this place, is called the high. So here is called the close. Why is it called the close? Because for a bullish candlestick, it always starts from here upward, because it's an upward going candlestick. So it starts from the low. The low here is usually where it's the one that is usually open first, and once you see something like this, it's like a downward movement came, and then it overcame the downward movement and then started it from here upward. So if you look at this now, this is the low. When you say a low, this is the low, is what I call the low. This is the open. Now it doesn't matter the downward movement as if it has spent some time overcoming the downward movement. When it starts forming here, it's considered the open of this candlestick. This is the open of this candlestick, and you see it went bullish, and then here is the close. But this, it didn't come here and then close. It first went to the high, and then because of the bearish power, it came down and then closed the candle here. So this is the close. This is formed last. The close is always formed last. After the open, the next that is formed is the high before it now comes to the close. That is for the bullish candle. Now coming to the bearish candle, like I told you, for this, it starts from the bottom and goes to the top. Here it starts from the top because it's a bearish candle, it's going down. So this is what happens. This is based on, there must have been a bullish movement here, and this candle coming down, the bearish power overcame it and then begins to show an open here. This is when the open started, and it comes down. It didn't close immediately here. It didn't come to close now. No, it came down here to low. And by forming the low, the bearish power pushed it up a little, and then the candle closed here. So you see, this is a typical bearish candle. Now, this is the real body. This place from the open to the close, is the real body of the candle. So this is the upper shadow of the candle. The upper shadow is where you have the close and eye here, and the close and eye here, upper shadow, and this is the lower shadow. This is lower shadow. So take note, this is a typical candlestick. I'm going to use this to explain the lesson we want to learn today on the part 4 on the series of the secret of moving averages. I'm telling you, like I used to tell you, the secret of great traders is hinged on two major things, which is number one, the ability to understand the charts, and number two, the ability to understand the power of indicators. And how to understand indicators has been what we have been working on, and the one particular indicator we're working on now is the moving average. The moving average, I know a lot of strategies has the moving average indicator in it, which is why we are talking on it. Today is part 4. Please, if you have not been following, go to my channel. You will see under the playlist understanding indicators. You go there and watch the last 3 parts of this series, the part 1, part 2, part 3 of the secret of moving average. You will really get a lot of benefit from it. All right, let's go now to our trading channel, MentorTrader 5, and explain how does this affect what we call the moving average in the area of apply to. All right, guys, we are here. This is MT5, MentorTrader 5, and this is Boom 500. And if you look at the chart, you will see some lines on it. All these are moving averages. You'll be surprised if I tell you the amount of the number of moving averages on the chart. All these are moving averages, and they are all moving average period 50, shift 0, and its method is simple. These are all simple moving averages, these SMAs. But why are all these moving averages, which are having the same period and they are having the same method simple, why are they now showing different lines? They are showing different lines because of the apply to. So let's go now and go and explain what the apply to really is. See the number of moving averages that are here: 1, 2, 3, 4, 5, 6, 7. 7 moving averages on the chart, and see the different lines that they are forming. So this one is moving average period 50, shift 0, apply method simple, apply to close. Apply to close. Apply to close. Now, apply to close means that on a typical candlestick, that area called close is the area that this moving average is going to apply the period to. So the value is going to be the close value on the candlestick. It's not going to take the high value, it's not going to take the low value, it's not going to take the open value. It will focus on the value of the close, and that is what it's going to use to calculate the moving average. I hope you are getting value from this. So you see, if we say apply to close, this is what it does. It closes on the closing value of that candle. So if it's period 50, it's going to take the closing value for the last 50 candles, sum them together and divide it by 50 to produce a particular point that is going to mark, and it's this point mapped together that forms the simple moving average that we have now. So this is apply to close. Now the next one says period 50, shift 0, method simple, apply to what? You see, open. So this means that this moving average is going to apply all this period, focusing on the value of the open for the candle. The open value, whether it's a bullish candle or a bearish candle, is going to focus on the open value. The open value of each candle is where it's going to apply to. So you realize that when you are using a strategy, and the strategy is using a moving average, and you are used to apply, so where you apply it to will determine the value you get. Can you just do it anyhow? If you use any one, you have to use a particular apply the particular position you're applying it to get the value that the strategy is telling you to. You realize that some apply it to open, some apply it to close, some apply it to high, depending on what the strategy is talking about. You get it now? So this is applying it to what? Open. Like I showed you before, open on the candlestick, that portion on the candlestick. Now, the next one is what? Applying it to high. So it's going to apply this simple moving average to the high value of the candle. The high value of the candle, either it's a bearish candle or a bullish candle, is going to apply to the high value of the candle. So with that, that is the value you're going to get. Then the next one is applying it to the low. So all this applied to is talking about the candle, applying it to the low of the candle, the low of the candle. Now, so this is period 50 shift 0 method, simple, but it's applying it to the low of the candle. So the next one is applying it to something called the median price. Now, what is the median price? The median price is, you realize that there is the HL over 2. The HL there is the high plus the low divided by 2. The high value plus the low value of the candle divided by 2 is the median price. So it's going to apply it to the median price. So you can see that a moving average might be period 50 shift 0 method, simple, and if the apply to is to median, is going to add the high value plus the low value and divide it by 2. Then that is the value it's going to use. You can see it can be different. So you need to understand all this and know what it does for you to get a very good benefit from it. Now, this next one is saying apply to what? The typical price. Now, what is a typical price? You see the value here is still the same, period 50 shift 0 method, simple, but it's applying to what? To the typical price. What's typical price? What do you see there? You see the H, you see the L, you see the C. You see the HLC. Now it is the I plus the low plus the close price. The high, the low plus the close price, all added together divided by 3. So it's going to pick that value to plot the moving average. So if any indicator, any strategy is telling you apply to the typical price, this is exactly what it's going to do. It's going to take the high value, take the low value, and the close value, add them all together divided by 3. And that's the value it's going to pick. So you see that you can have a moving average of period 50 shift 0 and method, simple, but not get the same if you are not if you are applying it to this as you are it goes with applying to just close or open on depending. Now the next one said weighted close. Weighted close. Now it's applying to weighted close here. Now if you look at it now, this is period 50 shift 0 method, still simple. You can see that you're now applying this to weighted close. What does it mean by weighted close? Weighted close means that is giving more value, more weight to the close portion, though it is HLCC in the sense that it is giving more weight to close. That means it's giving more, it's considering the high, the low, and the close, but it's giving more weight to the close value. Take for example, you are saying, okay, let's add the high, let's add the low, and let's add the close 2 times. So you add the high plus the low and twice of the close value. It's as if you are giving more weight to the close value. You add the close plus close, and then you divide everything by 4. So that way you are giving more weight to the close value. So you add the high plus the low plus the close, and then plus the close again, the close value, and then you are dividing it by 4. So that way that moving average is going to be more tilted towards you plotting a close moving average, whereas it's going to be taking into account the high and the low as well, but there will be more weight given to the close value. This is how the weighted close is gotten. It's still period 50, it's still shift zero is still method simple, but weighted close means that you are giving more weight to the close value by adding the close value twice, then dividing everything by 4. This way is how you use this apply tool. You get it? However, there's a last one here which I want to make you know, and you realize that it's saying previous indicators data. Previous indicators data. What does this mean? Now I'm going to do something now, and I want you to please follow. I'm going to delete all these moving averages, and I'm going to do something, and so that you understand that last one, and I will call it today. I'm going to add what I call parabola. This is the parabola SAR, parabolic SAR. I just take it on default and add it done. Now you can see how the parabolic SAR is going on the chart. See all this. See all this. Sorry, I'm using the 1 minute, the 5 minutes time frame. Okay, you can go to the 1 minute time frame, and you see the way it went. You can see it. All these dots have spaces in between them. You can see they have spaces in between. There is a space here, there's a space here, there's a space here, but they are all following a pattern and then moving like this. So if you now choose to add a moving average, now let's say we want to have moving average, and we are now saying let's apply to the previous indicator data. Let me choose something thicker so that you can see it. I'm applying moving average period 5, shift 0, method simple, but I want to apply to the previous indicator data. See what will happen here. It's going to draw this moving average alongside the path of this parabola. Parabolic SAR. I can see how it looks as if it's following it. This is exactly what happens when you make a previous, you apply an indicator to the previous indicator that you used. So it's going to take it and then match it close to it. It will just look as if you are drawing an outline for the, you can see the way it went. It's as if it's going the same path with the parabola. So once a parabola jumps here, you see a long jump, and then it keeps following. See, it's like it's following the parabolic SAR, and that is exactly what that function does. I hope you guys have gotten value from this. So next time you're using a strategy, and the strategy has given you the period, giving you the shift, and giving you the method, the apply to is also very, very important. Please don't just assume that everything is closed. It might be applied to close, applied to open, it might be applied to high, it might be applied to low, it may be applied to medium price, it might be applied to weighted price, and then it might be applied to typical price or applied to the previous indicator data. Be sure to get your facts very clear when you are learning a strategy, so that you can duplicate it effectively and get the same result that the person who profounded the strategy wants you to get. And I hope you guys will be able to keep trading excellently and getting excellent result. All right, guys, take care. And if you are not subscribed to this channel, please subscribe and turn on the notification bell so that you can get notified when I upload a new video. All the best in your trading session, and there are very, very great videos coming. I'm working on a very powerful strategy, and also there's a very big good news coming, which I'll be sharing with you guys very soon. Take care.